All right, how are you? So today I want us to look about accounting for VAT. So basically this one is how do you record VAT in your books of accounts. So I'll do this by way of an example. So assume you buy, cement at a cost of 100,000 exclusive of VAT. So let me say this is on first March 2021, and on 13th March 2021 you sold cement bags at a value of 300,000 excluding VAT. So you're required to record this in your books of accounts. So how will you pass journal entries for this, and how will a ledger look like? So this is what you will do. So on first, so this is date, and then this is journal number. Then you'll have account, then the description, and then debit, and then credit. Now this is 1st March. You will, of course, these are purchase expense. So this is purchase expense. Then account is the purchase expense. So let me bring this here. So this is purchase expense. Then this is journal number 1. So let me say 001. And then description is purchase of cement. So this is purchase of cement. And then what you'll have here is you will have the expense is 100,000. So you will have your 100,000. But you will pay VAT on this. So the VAT on this that you will pay for. So when you are purchasing this cement, you will not pay 100,000. You'll pay, the supplier will give you with the VAT element. So what you will do here is that you will still have this here. You still have this. You still have this, but this is, VAT account. So you'll put this to your VAT control account. Let me say control account because VAT control account, and then you'll say VAT on cement purchased on VAT on cement. Yeah, so it will be 16,000 because it is 16%. So then the cash that you will pay on the same date will be like that. And then this will be bank, let me say bank account, bank. So you will credit bank account because money has left your bank account. So purchase of cement on 1st March. So it will be 16,000, 116,000. 116,000. So this is how you are first journal will look like. So this is how your first journal will look like. And then when you make the sale, let me underline this so that it looks neat. So when you make the sale, it will be, so the sale is 300,000. So you'll have here 13th March, then you'll have here 002, 002. You'll have here, so let me put this 001 and 002. Then you'll have your sales, your revenue account. Sales, sales of cement on 13th March. But the practical situation is that you will have the invoice number or the, that you will indicate here. So this one, sales are credited, so this one would be 300,000. 300,000. Then you'll have VAT again, because you'll charge when you are selling something and you are VAT registered, you'll have to charge VAT unless you are not VAT registered. So this one will be VAT. No, so this will be VAT control account. So this one will be VAT control account. Then you'll have VAT on cement. VAT on cement, bought on cement. And you'll have something like invoice number or something like that. Invoice, whatever. So this one will be 300,000 times 16%. So this one will be 300, 123 times 0.16. Then I will give you 48,000. So that is the end of your entry. Now I want to insist that this one you do if you are VAT registered. If you are not VAT registered, then of course your entries will not include the VAT count. So when you come to the ledger for VAT, it will look like this. So when you come for the ledger for VAT, so let me say that this is VAT control ledger account. You'll have debit and credit here. So let me say you have debit, credit, and balance. Let me use this format. Not the T. I know you're aware of the T format, but this format is more practical. Now this is VAT ledger account. Sorry, VAT ledger account. So what you'll have here, you'll have your date, JV number. Inside with date, journal number, you have description, not detail. Description or detail. Now, what you will have here will be like this. So the first is on 1st March. 1st March. Journal number 1. You have, you'll say purchase of cement on purchase of cement. You may put an invoice number here, but since we don't have it, so let me just use the date, 1st March. And then since it was a debit, like you can see here, it was a debit, so you put it on the debit side, is 16,000. And then you'll have here again, you'll put this VAT on sales that was on 13th March. Have this on 13th March, and then you'll have the journal number, and then you'll have sales of cement on Then you'll have here, no, this one is not 16,000. Yeah, this is 16, but this is now 48,000. 48,000. So the difference will be, oh, the balance I've not put here. So this is 16,000. Now the balance here now will be 16,000 debit less 48,000 credit is 32,000 credit. So this is, so this one is 32,000. So or you can write it like this: 16,000 debit. Then when you come here, you get 32,000 credit. So this means payable. Okay, so on 20th, when you're supposed to pay your VAT, you're supposed to pay your VAT by 20th of the following month. So by 20th of April, so payment, let me assume you pay on the last day like Kenyans do, payment on 20th of April. What you'll do here is that you write a check to KRA after logging into your iTax and taking your slip. Then you have a check, or if it is not a check, then it will be M-Pesa. But how will you record it in your books after paying it? So after paying it, you come to your books and just say here that you have. So since this is a credit, you will need to debit it, to clear the balance. That's why it's called control account. Control account is a clearing account. Things go in, things go out, things go in, things go out. So it's not a stable account. Yeah, so that is that is how a control account behaves. So what you have here when you pay is that you'll have your bank account, or your cash account, your bank, account ledger or ledger account, your bank ledger account. You'll have something like, if you pay on 20th April, so let me put this titles first. So you have this, you'll have this, you'll have this, then you'll have here, date is 20th April, 20th April, then you have the number 003. So let me, I didn't put the JV number. Oh, okay. Let me put this as a journal first before I go to the ledger. So let me put journal for payment. Journal for payment. When you pay, you'll have it like this: 20, then JV number, then account, then description. So let me put this like this: journal for payment, an account, then it will be like this. So account is first bank, because then VAT March 2021 VAT, March 2021 VAT payment. You'll have to credit your bank account because money has left your bank account. It is an asset, and an asset goes down, you credit. So this one will be 32,000, and then the balance will be 32,000. These are journal. At journal, you don't have balances. So then what we'll have here is that you still have this and have this here. Then you have now VAT control account. So this one will be like this, and then you have, let me shorten this for some minutes. You shorten this like this, and then this one now you will debit 32,000. And so when you debit it, which means you are clearing this balance because you are credit. So when you debit it, now when you come here, of course, you will reflect that journal which was on 20th April. 20th April, then it will be 003. Then it will be, description will be VAT payment, March VAT payment, March 2021 VAT payment, and then it will be 32,000. And then the balance here will be nil, 0.00. So that is how VAT accounting entails. So, and this is for those who are VAT registered. Like for you to be VAT registered, I think you have to be transacting 5 million and above. So unless you fall under voluntary registration. So this is how we account for VAT. I hope you have enjoyed it. Otherwise, thank you.